You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
Welcome back to TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We spend the full hour, close to it, breaking down the latest in the world of futures options, so equities, ags, crude oil, metals, all that fun stuff. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. If we sound a little bit different, it's because we're not coming to you from our studio in Chicago, but from actually scenic and sunny Florida for the Futures Industry Association Conference. And I'm pleased to be joined here for this live on location episode of TWIFO by an old friend of the show and a newcomer to the program. We'll start off with our old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing. It's always a mouthful over there at FTSE Russell. Sean, welcome back to the program. I noticed you did not come burgers in hand this time, sir.
No, it's good to be back. We will resume the burger agenda when we get back to town.
I will say there are worse things, though, than meeting in locales such as this. It's a little bit warmer than back home right now, which is nice.
And as you know, I travel quite a bit, so it's good to have you with us on the road.
Yeah, that's true. I usually I'm located in the studio. I don't get to do the road show as often, so it's fun to be on location. It's always especially when it's a location like this. And also joining us, he's been on the network before. I believe on this program, but it's been a while. He is Tim McCourt, the global head of equity products and alternative investments. Another long one over there at CME Group. Tim, welcome to TWIFO.
Great, yeah, thanks for having me. Great conference so far here down at FIA Boca, and looking forward to today's show.
Yeah, it should be fun. Since you're both in the equities realm, I thought we'd kick it off there with a lot of stuff going on. Coming into showtime here, we see the markets on pretty much a broad upswing. Most of the major indices up about 0.75%, if not more. The NASDAQ kind of leading the charts to the upside, up nearly 1%. The S&P kind of the laggard, up about a little more than 0.75%, and a similar, if not a little bit less, for the Dow. So a little bit of a bifurcation, old economy versus new. But of course, since the last time we chatted, Sean, all this green on the screen in the equity space means vol coming off a wee bit. We have VIX cash about 13.5, RVX a little bit shy of 16, about 15.9. So that spread has, the VIX is off about 3 handles, the RVX off about 3.5 handles. So Russell vol
coming in,
plunging, shall we
coming
say?
Coming in as it does.
Yes. So that spread is tightened up now to about 2.5 handles. It was about 3.5 the last time we
spoke.
So it's and it's interesting. A lot of that has been driven. We kind of mentioned this before too. A lot of that has been driven by the aggressive moves in Russell vol, not so much in VIX land. Russell gapped up to the upside and then is gapping right back down. Has it kind of surprised you, or maybe taking the pulse of people at the conference here, how much movement we're seeing out here in Russell volatility over the past couple of weeks?
No, I think the index is doing what it does. It as we said, ebbs and flows, I think was the key terms we used last week. But
I have been known to say that once.
As the market breaks, you get the bigger swing. Hence the historical skew in the downside of Russell puts, right? So not surprised at all. And as markets rally, that vol and skew comes in. It's just the nature of the options beast.
Yes, it is. And speaking of the nature of the beast is also to churn out interesting new products. And Tim, it's one of the reasons you're joining us today. A lot of interesting stuff cooking over there in CME. Before we even get to that, I was just talking with Sean about kind of the last few weeks and the last month or so where we've seen this general broad resurgence, this uptick in equity volatility. Equities are your purview over there at CME. I'm curious, what has the last month and change, or maybe even Q1 been? How's it been for your team over there as we've seen this broad resurgence of volatility? Has this been a big driver of activity for your clients? Are you hearing a lot of them are attracted by this? Are they getting brought back to the market? Is it maybe too soon for them? What are you hearing out there?
Yeah, I think with respect to some of the volatility that we're seeing in Q1, it's obviously not quite the same scenario or environment that we were seeing in Q4 or even kind of this time last year. But I think with most trading opportunities, the return of volatility is welcomed. For most, it presents trading opportunities. And those firms that then need to risk manage in response to the volatility can do so with relatively ease with the global equity index offerings that we provided CME Group nearly 24 hours a day. And I think at this point, it's a little too early to tell what it makes for the year, but it's certainly been interesting thus far, halfway through March. And customers are continuing to look at, as you point out, not just one index over the other, but as we have these type of moves, the indices also behave differently. The NASDAQ is continuing to be a very popular trade with respect to 2017 and 2018, and that's continuing into 2019. You have Russell 2000 with respect to showcasing the small cap universe behaves differently than the S&P and the Dow. So when you also have volatility, it presents opportunities within and across the indices that our customers are looking at and very excited about as well.
And it's one of the great things. You got them all at CME Group. You can trade them all. So it's really
one-stop shop, if you will.
One-stop. Fantastic way to trade one versus the other, since they do trade differently, and there's all kinds of opportunities there.
To abuse that oft-abused cliche. But Tim, you mentioned kind of volume on the year. Obviously, last year was a record year for a lot of options products out there, equities, indices, a bunch of different things. And we took a pulse of our audience at the beginning of the year. We have a lot of institutional and professional guys in our audience, asking them, did they think 2019 would beat or come in below 2018's record volume level? And overwhelmingly, I think about 3/4 of the audience said yes, definitely, they're going to blow the doors off 20, which is that's a lot of volume. And then 2 months in, we kind of took another poll again recently, just in the last week or so, saying, hey, 2 months months in, both months active, but not quite as active as last year. Are you still as bullish on the year's volume in the equities as you were at the beginning of the year? And still almost 75% exactly again, still very bullish on overall volume for the year. So I'm not sure what that means. Probably going to need some pretty impressive events over the next 8 to 10 months to really move the needle a bit in terms of volatility. But I guess that's a good thing for you and your team, Tim. People are still bullish overall on equity volume for the rest of the year.
Yeah, I mean, it's certainly great to hear. I would encourage them all to get to their screens and trade more, because we are down a little bit here in Q1. But these things are, go through cycles and they ebb and flow. And what we're talking about here is when we look at some of the volumes that we're seeing, we're still seeing the general trends we saw present themselves in 2017 and 2018, where the advent of shorter dated options remains attractive to individuals. We're seeing more activity in the weekly options, the Monday, Wednesday, Fridays. In our major indices, we're seeing growth in our Russell options, growth in our NASDAQ options. So I think it's a general trend. So I think it's good to hear that people are still bullish. And I think when we look, some of the things that we're excited about is, we're making traction with respect to trying to grow our business outside of the U.S. So that's another area of focus for us, where when we look at options on futures specifically at CME, one of the advantages we have is providing that global liquidity and that liquidity around the clock. And you kind of said, it may take, some market moving events here over the next 8 to 10 months to maybe bring our average up, so to speak, above kind of where we're trending here through March. But the good news is when we have those market moving events, if you think in recent history, whether it be Brexit or the U.S. presidential election in 2016, or how people were managing going into the midterms in 2018, these are all market moving events that aren't comporting with the standard Monday through Friday 9 to 5 news cycle or kind of cash equity market hours. So it's a great opportunity for customers, and market participants when these events do happen. The E-mini options that are offered at CME being available 24 hours is a great tool for them. So when the volatility returns, we're ready when they are.
Sean, you made that point a lot before as well about in the Russell in particular, about how you're seeing those pockets of liquidity in the non-U.S. hours really start to take off.
It's actually growing. Yeah, it's growing across the board in the whole suite of equity products at CME Group. But yeah, Russell, I've definitely noticed an uptick in the Asian hours, and also a large percentage of the daily volume comes out of Europe.
Has that been a lot of your day down here? Obviously, a lot of European players down here, a lot of Asian players. Have you been out there growing the pie in the non-U.S. hours? Is that what you've been doing down here?
That's what I do on the road, yeah.
Well, you mentioned before the weeklies, and I think a lot of the growth out there has been speaking to the smaller nature, the smaller duration, the kind of more bite-sized nature of those contracts. And I know you have some more products coming in that, I guess you can call it the bite-size framework in the equity space. So walk us through what you have coming down the pike over here with the micros at CME.
Yeah, so earlier this week we announced the launch of our micro E-mini futures contracts on the S&P, NASDAQ, Dow, and Russell 2000, and we're very excited about it. The main feature is that they're 1/10 the size of our existing E-mini products. And what it does is it allows an active individual trader or someone who wants to trade in a more precise notional term to access the global equity index benchmark and all the liquidity that CME has to offer, but in a much more approachable size contract. When you think about how these contracts have been out in the market now for more than 2 decades, the index values have continued to rise. The notional value of the contracts has gone upwards of close to 140,000 for the Dow, NASDAQ, and S&P, and about 70,000 for the Russell 2000. That requires a decent amount of cash outlay for initial margin. We're now right-sizing that for some individual market participants at 1/10 the size. Just makes it much more approachable and provides that on-ramp for market participants to get involved in futures trading. So we're very excited about it.
Now, did this come about as a result of just feedback from retail participants? They said, hey, we like the E-mini, but what do you got in a 1/10 size? Is that where they came about? How did this come about?
It's a great question. I think with a lot of our product development at CME, it's in response to customer demand, and we look at customer demand-driven innovation and product development. And this is a demand we've been hearing for quite some time. I've been at CME almost 6 years, and it's come up here and there when I first joined. But in particular, over the last 2 years, it's really become more into focus as we've seen retail participants increase their volume at CME. And when we say retail at CME, we mean that active, sophisticated individual trader. These traders are already trading in other parts of the ecosystem, whether it be cash equities, options, ETFs, CFDs abroad, and things like that. So they're really increasing their activity, and they wanted that smaller size contract because a lot of times what was happening, even if they were active in futures, they couldn't quite scale their exposure up or down with the precision they wanted. And we were unfortunately facing them with an either or decision a lot of times, where if they wanted to invest in some stocks or CFDs or ETFs or other futures even at CME, they would often have to sell their E-mini because it was a little bit too large. They had to free up cash, and it was an all or none for some of them. So this will give them the flexibility they need to continue trading futures as well as being able to trade in other parts of the ecosystem at the same time.
It's funny. It speaks to the evolution of the space, because years ago, obviously, all you had was prior to the rise of Globex, you had the big S&P future, and that was it. And the entirety of the rise of the E-mini was much more flexible. It was a smaller, more bite-sized contract. You could do, you want to do 3, you can do 3. You don't have to do all of them. And now we're adding another layer of nuance to it with the 1/10 size, so you could do whatever ratio floats your boat. So Sean, I imagine this is pretty exciting for you guys too, to have new additions to the Russell 2000 offerings here.
Absolutely exciting, and I think Tim mentioned it, but in regards to new products, the CME, as I think I've said on the show several times, they've become very scientific in the launch of product, where the success ratio is like way higher of 80% versus the days when they used to just throw lots of products out there to see what would stick. And with the analysis that they do from campaigning and from outreach to clients, there's a much more higher probability of success. So I'm very excited and very bullish on these products.
And Tim, one of the things we see whenever we see new products introduced is sometimes the liquidity providers take a bit of a wait and see approach to these new things listing, and you have this weird kind of chicken and egg scenario where they don't want to jump in until the customers are there, and the customers don't want to jump in until the markets are tight. So what are you hearing from the liquidity providing community? Are they excited by this? Are they maybe scared by yet another offerings in the equity space? You have a lot of commitments from the liquidity providers so far?
They're very excited about it, and I think that's the benefit, as Sean was saying, when we go through this kind of scientific or empirical driven process where we try to validate the customer demand. What that does is it also in advance takes the temperature and gets a sense of who wants this product and how willing are they to support it on day one. And our micro E-mini future validation exercise was no different, but the pleasant surprise was that the liquidity providers that we have in the E-minis are overwhelmingly supportive of this opportunity. They want to bring more participants into the market. They want to provide that liquidity. And what it does is by keeping things a little bit simpler and just adjusting the size and keeping the minimum price increment or the tick value of the contracts the same as the E-mini, it also makes it easier for them to avail the kind of, let's call it, incumbent liquidity in the E-mini into the micro, such that they are much more parallel and congruent in terms of their price discovery and market structure. So they're very excited about it. And we announced that these contracts will be launching in May, which is not that far away. But I think the overwhelming response we had from both our retail partners and customers and liquidity providers is there any way you could do it faster than May?
That's a good sign.
So we're excited.
And it is TWIFO, This Week in Futures option, so I'm legally obligated to ask you. I know we don't really have an official date for the futures yet, but is the plan option sometime in the near future or not till next year? What are we looking at on the option side?
I think it's tough to forecast when options make sense on any new product, but our current focus right now is on the futures, the micro E-mini futures that we're introducing, and just like other products with respect to customer demand, we will listen and validate, and if it makes sense to introduce them, we'll cross that bridge when we get to it. But the one thing I would say is I think part of our aspirations and what we're hearing from customers is that those participants that we are attracting through the micro E-mini futures or potentially attracting through the micro E-mini futures when they launch in May, once they're in the CME ecosystem and experiencing what CME has to offer with respect to liquidity and around-the-clock access and the margin benefits and the capital efficiencies, once they're there, they could also start trading E-mini options or E-mini futures. It's not necessarily precluding them from trading other products at CME. So I think we'll have to wait and see if they also would benefit from the bite-sized or right-sized notional for options, or if the E-mini options on the E-mini futures are sufficient for their purposes.
I like that. Right-sized. That's a good way to put it.
We can thank our marketing folks.
Yes, I had a feeling that wasn't your term, but I like it nonetheless. Here we are. It is TWIFO after all, so let's break down a little bit of the activity we're seeing out here. By the way, listeners, you guys can find this all for yourself. CMEgroup.com/TWIFO, TWIFO. And if you did that, looking out here in the Russell options right now, Russell's up nearly 2.5% on the week, right around the 1560 level, and it looks like that front contract is where all the action is this week, Sean. About 50% of the paper with the 1540 puts, so about 20 odd handle out of the money puts, lighting it up out here this week. That's the big paper in the Russell. Let's see if we see similar paper out here in the E-mini S&P options, where we're seeing the lion's share of the trading. Actually, S&P, let's see, coming into showtime is up on the week, similar percentage, nearly 2.5% on the week, a little bit north of the 2,800 level. And surprise, surprise, the 2,800 calls out here, what are these? March are where the action is the lion's share, with about nearly a third of the paper going up out here in that March contract. Also, it's not all calls though. Let's see, the March calls did about 14,000 on Monday and nearly 10,000 on Tuesday. So a little, and 26, almost 27,000 on the week. But we're also seeing actually longer term out of the money puts, 1675 puts, so about 1,000 plus handles out of the money in September, going up quite a bit today, or this week as well, I should say, about 18,000, almost 19,000, about 11,000 on Monday, and about nearly 8,000 going up on Tuesday. So interesting paper, obviously volume, we mentioned before on the show, coming off quite a bit across the board. No surprises to be had there. Speaking of surprises, we like to give our audience a little bit of some hints, some teases of what they can expect in the future. So maybe, Tim, you kind of hit on some new products already, but any other exciting things up your sleeve over there in the realm of equities, sir?
I think some of the things that we've been working on that we're continued excited about are, especially for those option listeners out there, as we continue to see an increase in our dividend futures on the S&P 500. We see BTIC, which is our basis traded index close, that is continuing to grow in 2019. That was a great success in 2018. And we're also seeing the popularity of that expand beyond the S&P, where Russell 2000 BTIC is up substantially this year, as well as NASDAQ. And that just provides a lot of use to option traders or variance and volatility traders who are using or need to trade around the close as a result of option expiration or managing the resultant delta from their gamma profile of variance. So those are things that we're continuing to see. And then total return futures are continuing to increase in popularity. Actually, we put up a brand new open interest record yesterday in our S&P 500 total return futures at 275,000 contracts. And the end of the year, we expanded that offering to also include Russell 1, Russell 2, NASDAQ, and Dow. So we're very continued to see that product grow. And it's important for options because these are tools, when you look at the basis, the dividends, and the total return aspect, they're all pieces of the same puzzle, and allows some of those option traders to more appropriately manage their forward risk that they have when they put on their option positions.
And we're talking micros here, but the regular old E-mini doing pretty well as well. I noticed the E-mini S&P futures hitting I'm not sure if that's a record, but it's a pretty impressive level of 2.7 million contracts in open interest. Is that a new record out there?
I'm not sure if it's a new record off the top of my head, but I think one of the things that we're seeing here, where we're seeing I think about 570,000 of OI in the Russell 2 as well, is we are in the middle of the equity quarterly roll, which tends to put a little bit of upward pressure on the OI numbers as people move from the front month to the deferred month. But we are seeing an increase in trading. I think that's something that we saw with respect to the roll in 2018. And now as we head into 2019, the implied financing level continues to move around, which is presenting opportunities. And as people are looking to move between cash and futures, we kind of expect that to be an interesting opportunity, not only for March, but probably the next few rolls as well.
Sean, you've seen the same thing as well, a lot of driving of interest with the roll coming up, and at a conference like this, is that top of mind for a lot of people?
Top of mind, and as we're rolling from March into June, again, big month, the beginning of the whole recon process with the FTSE Russell product. So we're looking for a very exciting recon this year.
It's nice to have these baked-in events. I need your guys' job. You have these events that just drive volume, and everything's great. It's a fun experience.
Yeah, and the Russell Recon's always a great event, market-wide. Everyone's got eyes on it. I mean, Sean's pressure on. I think last year was a record recon.
Record recon last year.
So, pressure's on. Pressure's on.
There you go. Competing with the 2018 was a tough year. But our audience is bullish, so I guess we have to be bullish as well. I know we're doing a deep dive on equities, but Tim, since we have you here, the other part of your title there also says alternative investments. We've been doing a deep dive into all things crypto with our new crypto rundown program. It launched at the beginning of the year, so it's been a fascinating tour through the world of a lot of esoteric and interesting products, shall we say, to say the least. One of the ones that isn't esoteric anymore, at least, are your futures over there, with looks like about nearly 2,000 contracts on the tape today. Excuse me, on that March future lighting it up, which is pretty light today, but I know you guys have had some recent spikes. What was it, up to 18,000, the high recently in the futures?
That's correct. The Bitcoin futures at CME posted a single-day trading record in February, over 18,000 futures contracts, about 92,000 equivalent Bitcoin, which is a very healthy number and a sign that the futures market continues to develop in response to the risk management needs in the crypto space. When we look at the month of February, we also had between 5,000 and 6,000 contracts average daily volume on the future. And again, where our future has the 5 Bitcoin multiplier, it's a pretty healthy number in Bitcoin equivalent. And when you look at some of the other platforms in the US or globally in the spot market or the digital market, our future in equivalent terms is trading more than some of the spot platforms. So we're starting to see that future becoming a vehicle of price discovery in the broader ecosystem, and very pleased with the progress we've made to date. Where the open interest is also doing pretty strong, and I think since November we've had over 40 large open interest holders in the Bitcoin futures contract, defined as those individuals or accounts that are holding more than 25 contracts. So that's a number that continues to grow, and all healthy signs of a great futures market beginning to form. And we're happy to see this progress, 15, 16 months in.
And I have some more questions about that. I think our listeners do as well. So maybe without further ado, we'll jump right on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to the Futures Options Feedback. This is the portion of the show where you guys take the reins, your questions, your comments, your insights, your pearls of wisdom. We were just talking crypto, so maybe we'll start there. Let's see, what was it? Lost listen. Here we go. TronStar. I like that. Must be trading Tron out there, I'm assuming. That's a popular one on our crypto show these days. TronStar wants to know, CME Bitcoin futures are hitting new records. When will we see new products from them? Them, I'm assuming, meaning you guys over there at CME. So TronStar wants to know. A lot of our listeners want to know. We're doing pretty well in the Bitcoin futures. What's next in that suite of offerings there, Tim?
Yeah, great question. We're obviously very pleased with the progress we've made on Bitcoin futures and the progress that the underlying reference rate. So, we have the CME Crypto Facilities Bitcoin reference rate that underlies our future. That's been around since November of 2016. We launched the Ether dollar reference rate back in May of last year. So we're continuing to focus on the in-market pricing products we have on the reference rate and the Bitcoin futures. We continue to engage with customers. There's lots of ideas for product development. Nothing quite right now in the pipeline, but we are continuing to engage with customers. But our primary focus is on making sure the Bitcoin futures market not only becomes viable, but that we do so in a way that everyone is comfortable with, because it's very important for us to focus on building that market first in a way that works for everyone before we introduce additional products.
We're all waiting for it, Tim, though. We're all waiting for when let's just say the O word, the options. When can we see the Bitcoin options? I've lost track of how many times that question has been asked over the past. I'm going to start just forwarding them to you and say, here, ask Tim McCourt. He'll give you the answer. So give us a heads up. And it's just us talking here. There's no one else listening.
Yeah, no one else listening. We don't have a date for Bitcoin options, but the one thing I will share is that by far, by a large margin at this point, options on Bitcoin futures is the number one customer demanded product that we are hearing about. So that is on, it is on the radar. It's clear that customers want it, but we're continuing just to kind of validate. And as we said before, everything is in response to customer demand, but the exchange we have to be prudent and thorough about how we do this. So no plans yet to bring that to market, but maybe stay tuned.
All right, we got more product questions. This comes from Alan Smythe, maybe Smithy, maybe just Smith with an E, who knows? I'm going to say Smythe because it sounds fun. But Alan wants to know volatility stuff. He wants to know, are there any new volatility products on the horizon from you guys at CME? So maybe equity or maybe commodity. I know that's an area you guys have delved into in the past. Any plans for more volatility offerings in the near future?
No, right now, our focus is on kind of just the options that we have and making sure that people can manage their volatility needs through the options on futures. But in terms of general development, I'm sure Sean can see this on the Russell side. There's always a continued interest in volatility indices and products, and volatility as an asset class. But there's a lot of things that go into develop those ecosystems. So, I think we're all ears from customers, but nothing necessarily in the hopper right now. But I'm not sure, Sean, what are you seeing on kind of anything on the index front?
Same thing. Just to second your comments, Tim. Same kind of thing. It's all about client demand, and
You know what I'm going to say. You know what I'm going to say to you, Sean. Yes, of course.
I know.
When are we going to see this?
Every show.
It's just us talking.
And I sent him to
just a couple of guys in a hallway talking about volatility products.
And we're at a point where, as Tim said, use the options to capture and harness that volatility. That's the opportunity with VIX and RVX. You gotta use the options today in RVX.
Well, they were trading them up, and they're trading them up in the run a couple of weeks ago? Big prints out there.
Huge
at the
prints.
So. There you go. That's starting to get the story told for us out there. Let's see. Let's stay on the volatility tip. MLBBW. I don't know. You can make of that. I know you like your acronyms.
Nick was on the phone. He could probably create some acronym.
Break that into a bunch of different levels.
Major League Baseball, by the way. I don't know.
Yeah, there you go. Okay, I'll out. He or she wants to know: are there ever times where equity volatility skew is biased to the calls? We've touched on this kind of sometimes in the past. Equity volatility skew usually, obviously, predominantly biased towards the puts. That's where all the concern, is always to the downside. But there are some interesting moments where that does flip. It's not often, but it does happen. I don't know. Either one of you, Tim or Sean, whoever wants to take this for MLB.
Skew to the upside in options.
Skew bias to the upside in volatility in equity indices.
I mean, I don't know. I mean, even in my multi-year career, I don't know if I've seen it.
Only place I've ever seen it is in commodities like gold and
yes.
Yeah,
and a lot of
it's
the other,
more of a function, I think, of some of the term structures and things like that. Yeah, but rare in equities.
Yeah, and a lot of the commodities, obviously, where the concern is to the upside, we see that all the time.
Exactly.
Gold and things like that. Not so much in equities, obviously, because the concern is to the downside. It has happened a few times over the year. Usually, it's kind of these aberrant scenarios where there's what they call the upside crash, where something happens and the upside move is longer and more protracted than anyone anticipates, and usually then it blows through a number of strikes where the broad community is long, maybe getting into shorts, and they start bidding things up. So you see the calls get bid up as a result. Also, there are times in individual equities this could happen more frequently than in the indices, obviously.
Right.
Then you have a biotech, things like that. That happens all the time. Going into an FDA number, you have a $3 biotech that all of a sudden the calls are bid to high heaven because something's happening. So those happen a lot more frequently in the individual equities, but in the broad equity complex, it's a rare event, and when it happens, it's worthy of note and worthy of talking about. Let's see, we got time for a couple more here. Here's an interesting suggestion for the show, Sean. Maybe see if you like this. Embarcadero, I like that handle, wants to know, maybe you guys could do something like a weird product of the week on the show. Would be fun. Thanks for all that you guys do. It brightens up my week. Well, thank you. Thank you for the love and the suggestion, Embarcadero. What do you think, Sean? Are you down for that? A weird... We used to have something like that. We used to call it like crazy product of the week, and I think I've got away from it.
Do they have to be actually exchange listed product?
That's what makes it fun. It could be something esoteric, like fluid milk or something that doesn't trade much. The lean hogs have been on there before. All sorts of butter,
crazy,
fun things that are doing fun stuff. So are you down for that? I can put you in charge of that if you like.
Sign me in.
So you'll be in charge of finding the let's call it the bizarre product of the week. How about that? There you go.
Thanks for delegating that to me.
He's giving you that homework. You can
thanks,
Embarcadero. That's their point. Let's see. We got time for. Let's end it on a fun one. Let's see. More questions about weird products. That's interesting. People have that on the brain this week. Here's one maybe for you, Tim. Pod King wants to know, CME Active Trader seems it's primarily geared towards futures traders. Is there something similar coming for options traders? Obviously, Active Trader is the platform you guys have to onboard and act. And you're right, it was kind of created, I think, around that futures trade. I think you're adding more options functionality, though. Is that a focus going forward?
Yeah, absolutely a focus. And I think when we look at how we're referring to the Active Trader sites, we're even trying to be more cognizant of that. While futures may be the on-ramp into the CME complex, I think that's something that people can wrap their head around. They understand the linear risks they're entering into or how they're deploying trading strategies. But if you look, we made a big push around education and kind of putting out curriculums there for people. Like once they're on that site, that we expect them to explore and learn. And it's not that it's not focused on options. I think it's just that futures are the kind of first step on this journey with our new customers and market participants. But we certainly have a very robust options complex at CME that is available for market participants, the active individual trader, to get involved in. I just think it's that when we're looking at promoting what CME has to offer and all the benefits, it's just easier. People are more familiar with futures, so I think that's just the lens by which it's consumed. But if you look at it, options on futures are the next step, I think, for many people as they begin their journey in trading our markets.
Well, unfortunately, that's all the time we have for this special conference edition, equity-focused edition here of TWIFO. But before we go, let me go back around the horn with each of my participants, see what they have working that may be interesting to you. Sean, maybe we'll start with you. I know you're always doing road shows like this. It's a very tough life you lead, sir. But what's coming down the pike that we can get excited for over there in the land of Russell?
Well, volume and open interest is obviously exploding at CME Group. It's very exciting to see, but as we venture into the June contract, it's recon time. So we're ramping up for
all hands
very
on deck.
Exciting, and the pressure's on. And it happened here with Tim with Challenge. We gotta surpass 2018.
Listeners, you can't see it's an audio show, but Sean is sweating profusely now as he mentions that.
That's the humidity down here, not the stress in the show. I clearly have fun here.
And Tim, we've already talked about kind of a little bit of a peek into the future, but that said, if you have anything else up your sleeve, maybe want to leave our listeners with a little bit of a hint, a little bit of a tease of what they can expect from you guys. Now is the time, sir. The floor is yours.
Yeah, I think our primary focus, which we talked about earlier in the show, is just the successful launch of our micro E-mini futures. I'm very excited about this. I think the buzz down here has been fantastic. In terms of the media coverage we're getting, the customer coverage we're getting, the retail partners, the liquidity providers. It's not every day that when you launch a futures contract that there's this much excitement. I think the last time in my career that this has been this palpable was the return of the Russell back in 2017. So I'm happy to introduce the Micro Russell 2000, as well as the Micro NASDAQ 100, which we recently extended that partnership with NASDAQ through 2029 at the end of 2018. So these are all great steps, great next steps for our customers, our index partners, and most importantly, the market.
Again, that's expected to launch in May, all things going well?
That's correct. Pending regulatory review, as we like to say, May 2019.
Great. Look for those coming in May and hopefully options sometime down the road after that. And on behalf of Tim and Sean and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing. Not so much joining us live this week. We'll get back live next week, don't worry. And we'll see you next time for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.